Up now, we have Forum Daily's market update with Catherine Murray, the host of The Buck Stops Here. All yours, Catherine.
Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. We are seeing North American equity markets trade slightly lower today, with the TSX down mildly, but on track for 0.6% gains in this holiday shortened week. We are also watching U.S. Treasury yields continue to trade lower. Bitcoin's also off slightly, and WTI is also trading a little bit lower. So somewhat of a bit of a risk-off day. WTI, though, I would point out, so the price of oil is on track for 6% gains this week. And that, of course, followed the OPEC Plus decision to cut production, causing the price of oil and energy stocks to surge this week. But when we step back and take a look at the market sentiment right now, we are seeing a little bit of a risk off, really on the back of some significant negative macro surprises, which I'll go through in just a moment. Now, of course, this does follow a very strong first quarter results for the broader North American equity markets. In terms of the bear case right now, investors are very much concerned that the U.S. Federal Reserve will continue to hike interest rates and hike into a credit seizure. We know that from the Silicon Valley Bank bailout that one of the reasons for their demise was the higher interest rates putting pressure on the value of their long duration bonds. And then, of course, there was a run not only on that bank, but other banks. And therefore, so many banks are now increasing their lending standards, tightening up those lending standards. What does that do? That puts pressure on demand for growth. So in other words, stepping back from investing in longer term growth projects. And therefore, obviously, that has a negative impact on the broader economy. That's kind of the key macro theme that the bears are looking at right now. When we look at some of the most recent data, we did have ADP in the United States, the jobs data there coming in light versus expectations, initial jobless claims and continuing claims also on the negative side, actually in an uptrend. And then Challenger layoffs surged in the United States 319%. Year over year in March. So in other words, you are starting to see the effects of some of the layoffs, specifically in the tech sector, and now also the financial sector, really following through and moving into the broader economy. Hiring plans, I would also say in the United States, are the lowest level since 2016. We're also seeing this play out in some of the big retailers like Costco. They came out with their March same-store sales much lighter than expected, up 0.9% versus expectations of 3%. So a big miss there. That stuck under pressure to the tune of 3.5%. But if you don't own Costco, your takeaway should be, if Costco is missing so significantly on their same-store sales numbers, what does that really mean about the consumer? It likely means that they are shifting away from those big ticket discretionary items and really just more focused on the basic needs. We did, however, see Constellation Brands, the ticker there is STZ, come in with better than expected fourth quarter earnings. They, of course, are the owners of Modelo, Corona, and also wine companies that you might be familiar with, or wine brands. Stepping back, of course, as we look at the TSX, as I mentioned, we are trading slightly lower today. We, of course, had the March employment report. That's where most of the focus has been. Unemployment was steady at 5%. We did see a jobs gain of 35,000, higher than expected, which was 10,000. And that unemployment rate at 5% has held steady for the past 4 months. So no change there. Perhaps that could be read as a nice positive. I would, however, point out that given the slowdown and the economic slowdown expectations, you did see new equity issuance. So when companies want to come to the market and issue equity or stock, support their balance sheets, it's actually down 75% in the first quarter versus the 10-year average. So not a lot of activity happening in the Canadian capital markets. The Business Outlook survey was also released, and it seems though the expectations there are for lower inflation and a mild recession, really perhaps supportive of expectations that the Bank of Canada on April the 12th will not raise rates, will not change rates, and hold the benchmark steady at 4.5%. Away from that, what we need to watch for are earnings results that will be coming out over the next couple of weeks, and expectations are for 10 to 20% downside risk on the earnings front. Longer term, we're going to be keeping our eyes out on that U.S. debt ceiling. But for now, watch the earnings play out. And I'd also point out as well, we did have the big Canadian banks shareholder meetings this week. CIBC BMO, RBC, really all commenting that the financial stability of the Canadian banks are very firm. I'll leave it there. Back to you.
Well, thank you for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here, which airs Sundays at 9 a.m. Eastern.